All right, good morning, everybody. How's everybody doing this morning? Hope everybody had a safe week last week. Definitely saw some fireworks going on. What's up, Nutty Fafa? What's up, Tony? Appreciate y'all hopping on as always. Let me just check some stuff real quick. Life has been really testing outside it. What's been going on, if you don't mind letting us know? What's been happening, brother? Hope everything gets better. All right, let's pull up Forex Factory real quick. Fair relationship lives, damn. Yeah, I can relate to that, bro. Failed relationships is something I definitely relate to. When I first started trading, I was like with this person for like that I wasn't with for a long time. It was like less than a year, and then she ended up being pregnant. And then it just started spiraling out of control while I was trying to learn how to trade. Right, and then of course, COVID becomes a thing in the midst of a bunch of crap a year later. Yeah, man. So that's a good thing to point out, actually. We talked about it the other day. The more systematized you can make your trading, the less likely it is that emotions or anything outside of your trading will influence you. You know, because when you're full-time, we talked about the difference between full-time trading and like just trading while you have a job or other things, right? Like solely depending on trading versus having other streams coming in as well to kind of supplement it, to take the stress off. The more systematized you can have things, the more effort you put into the rules that you apply, the more importance that you place behind those rules being followed, and the more evidence-driven, system-driven decisions you can have as a trader, right? The better your process is in relation to that. It allows you to have a superpower of separating life's events, the stresses of day-to-day life. It lowers the impact that those things have on your decision-making. And when you're full-time trading, it's vital that you have this as in your arsenal. Because if not, just imagine how stressful it is. If you got to pay your bills, life's testing you, and you still have like emotional over trading or over leveraging habits in place. You know, that's one of the things that makes it so people don't ever reach the ability to be profitable and only depend on trading. It's the silent thing that nobody talks about. You know, the stress that traders have to go through if they're not systematized enough, or if they don't, have things in place where their decisions are not based on the way that they feel. It's very easy to go into the market, unconsciously take a trade because of how you feel. And we know from experience, whether you've been trading for a year or more, that never ends well. I always tell my private community this type of stuff because it's like it's what people don't talk about, especially in the world of social media. Everyone's focused on the highlight reels of their life. I think that's why they call them reels on social media, on Instagram. Reels. It's a highlight reel. It never really focuses on reality for a lot of things. But it's it's so important. That's why I come on here and we always go straight to process. That's why we talk about these things, because if no one else brings it up, most of the time we're going to put these types of things to the side and, I just want to learn technicals, right? Like, it's all focused on how do I get into a trade and all the technical fun things to look at. Those are all the things that people focus on most. Not realizing that it's the things like what you're going through and experiencing and how you manage those things, including losses and, stuff aside from your personal life, that's going to dictate whether you can do this full time, or if you're going to have to just use this as a supplemental income to the lifestyle you already have. There's nothing wrong with either side of that, obviously. But again, it just really depends on the goals that you set for yourself. And the goals that you set for yourself have a particular demand. And if full-time trading is the goal, these are conversations you have to have with yourself on a regular basis. These are things you have to reason with on a regular basis, because it's vitally important. It's more important than the technicals. So Tony, I'm glad that you I'm glad that you voiced that, because it's a very important thing that we all face. We all deal with life, but at the end of the day, the things that happen in our lives, especially if we're looking to be traders, we have to be aware of the fact that these things can directly impact us, whether we want to believe that or not. So being able to admit that and understand that reality allows you to go in and start finding solutions, versus the majority of people that put it to the side and focus solely on, what entry can I get into? Right? It's like, it's literally not the main important thing. There's lots of things that are important in trading, and there's lots of things that we have to focus on, but that particular thing that we just talked about right now is so important. And it's the reason why having a system. So those of you that do hop on this session that we do on a weekly basis, you see that it's always the same, constantly starting here, and then we end up ending on the indices and coming to a determination as far as what we think is going to take place. It's a system. It's something that's repeatable. The liquidity areas that we identify. We've mentioned the list over and over and over for the last couple months. For those of you that have been with me for a couple years, it's constant. Every month, every new week, I mention this stuff. It's always a reminder, because nothing's random. And the more systematized we can make things for ourselves, the less likely it is that we're going to make emotional decisions. Because if the system's not playing out, if the rules are not intact, we don't have an opportunity. And we don't want to be like the masses. 90% of people fail in trading in 90 days and lose all their money, or at least 90% of it. That's a statistic that's held true for decades, since the market was available. And there's a reason for that. It's not because the market's impossible. It's not because the market's random. It's not because you're never going to learn how to trade, or you don't know what you're doing. In some cases, people just don't have enough experience, obviously. But having systems is so critical to allowing yourself to be not moved, Having these specific things that mitigate certain problems it's so important. Everything has to be systematized. And I hope that's what you guys get in a large capacity with your time you spend here on a weekly basis. And at this point, it's going to be 2 times a week till November. So, And this week, for my private community, it's 5 to 6 days a week, AM session. So I hope you guys are ready for that. Those of you that are in my private community, right? So, but all right, guys. So moving past that, looking at the next week, we have a bank holiday. Those of you that don't know, when we deal with bank holidays or anything like that, the day before, in this case Sunday, the day of, and the day after are classified as low probability, high resistance conditions, because holidays come and big market participants, if you were a big market participant and there was a holiday, you wouldn't hop on the chart either, probably, if you were doing well for yourself. Just imagine. Holidays are for family, fun, relaxing, not being focused on the day-to-day activities of life for the most part, for many, especially if you're wealthy. Some obviously work continuously. For the most part, holidays are where low volatility occurs. And if there's heavy volatility, a lot of times it's trap vibes, trying to trap people in. But that's why we place rules on specific conditions. These are anticipatable, high resistance, low probability conditions. And there's obviously always going to be an argument or some idiot on social media saying, hey, I caught 1,000 points on this holiday, so what are you talking about? Right? There's always going to be an argument in a handful of different times in the market where certain rules will be pushed against, and not really look like they were having validity. But for the most part, majority of the time, this is a known fact that holidays bring bad conditions. And if you have experience, obviously you could trade any condition. I've traded any condition, showed it in my private community. I'm in the markets every single day. It doesn't mean I'm trading every day, but I'm looking at it, calling out different things that I see, what I believe consistently all the time. Even during holidays, even during CPI, right? Even during FOMC, NFP, all these other chaotic firework inducing moments in the markets. Right? But as you're learning, you got to put these guardrails in place. And ICT has said something that holds true and probably will always hold true. You cannot trade any holidays, any red news events right at the moment, right? Like NFP. You can avoid NFP, FOMC, Fed speeches, rate announcements. You could avoid every single one of those your whole career and still do well. It's not a mandatory thing. Being a day trader is not everyday trading, because every day doesn't bring large ranges. When do small ranges occur? Right? Most times before holidays, during holidays, after holidays. The day before NFP, the day of NFP, sometimes, right? Or the day after. Of course, there's obviously high volatility that takes place once the stuff occurs, right? A lot of times the NFP, CPI, and all those other news events can also, like we mentioned before, lead you to higher time frame moves starting or delivering to a particular higher time frame area or target or liquidity pool or PD array, basically in the form of a macro, right? Similar to how we use the macros on the lower time frame, the economic calendar can also be have a macro persona for the higher time frame delivery, right? But again, you don't have to trade on those days and you'd still be doing well. There's times after, right? So a lot of times things take place and then there's still like the rest of the week, After large ranges, expect small ranges, because large ranges lead to small ranges. Small ranges lead to large ranges. That's something Larry Williams apparently said that ICT shared with us. And if you go back and backtest the last 10 years or 5 years or just the last 6-7 months, you'll see that has validity to it as well. Right? So you always got to remember, when you get into the chart, if you're overexcited, thinking, oh my God, I have to take a trade, just remember, no, you don't. Right? Ambition cannot fog reality. And we have to manage the highs and lows effectively. the times when we're super excited, super motivated to get in and take a trade, along with the times when we take losing streaks and all these different things as well. We have to manage those and have a process in place that allows for you to manage those things effectively. Going back to what I said earlier, your trading career, your business as a trader, for one, your priority is risk control. And number two, you got to have everything in a systematic way so you can have systematically consistent results. And you want to focus on one way of doing things at first. I have 4 models I trade. It took me 8 months each to figure out the ins and outs of each of those models. I go in looking for one of the 4, and then I just observe and see what's present. Whatever's there, if it fits either one of the 4 models I'm looking for, I would get in. Those 4 models are market maker models, breakers. I've incorporated the YouTube model and institutional order flow entry drill. And each of those models has a continuation variation to it. So you can see how obviously that opens up a large world of opportunity for me. But if you have one, like we mentioned before, you're able to also have continuation variations and different time frames showing you that same one model, offering plenty of opportunities. So you don't have to worry about missing a move or not trading on NFP, FOMC during a holiday, the day before, the day of, day after, right? And things are very systematic, right? Very systematic. And it's best that you look at things from that perspective and not demand everyday trading from yourself, So these are very, very critical things that you have to go into each week, each day, reminding yourself about. One trade's not going to change your life. It's just not. Okay. Having years of consistency is going to be what changes your life. Having a systematic approach is something that will change your life. It also minimizes stress, because you'll know what you're looking for, when to get in, when to get out, or when to not trade. Those are all marked on the economic calendar. And then just remember, large ranges lead to small ranges lead to large ranges. So think about it. After a large range expansion, you're not going to, a lot of times, expect the next day or so to be another large range expansion, unless there's something dramatic taking place geopolitically. Right? You'd expect small ranges. So when you're expecting small ranges, or if you see we're in consolidation, you have to lower your risk, lower your amount of trades you take, or just decide entirely to just, hold off until you see things open up a little bit. All right. So definitely consider these things that we've talked about. We talk about them on a regular basis, obviously, because it's that important. Technicals and all that are great, like I always say, but I want to drive it home that they're not the only thing. Bias also is not the only thing. You could have a directional bias understanding, but keep getting chopped out because your entry timing is off, or you're forcing trades, or you're doing things outside of your risk parameters. You're entering on things that you haven't practiced just because you don't want to miss the move. There's many, many factors that can make you incorrect, which highlights the fact that one aspect of things isn't the holy grail. It's a very large part of it because you want to be on the right side, which is why we talk about it on a weekly, daily basis, when we hop on these calls. But it's not the only thing. It has to mesh with multiple things. As ICT or smart money traders, whatever you want to call it, we have multiple layers of skill sets that equate to an effective trader. It's not just one thing. You can't just know a pattern in the market or a sequence of events in the market and think that, okay, that's what is going to make me profitable. It's not. Or consistent, It's multiple things. And of course, the large aspect of that is what we do here on a regular basis. So yeah, the landscape of the news this week is clearly pretty interesting. First start of the week, Monday and Tuesday, in my opinion, probably not going to have too much excitement. We'll see what it does. But for the most part, an FOMC event is on Wednesday. President Trump speaks on Tuesday. That may be interesting. And Thursday, we have my favorite news event, unemployment claims, and then crude oil and different things. That may be an eventful day. We may have small ranges here because of the last week being a large range week, right? It ran higher to the exact target that we pointed out last Sunday, right before your guys' very eyes. In the private community and in the free community, I also shared our engagements and what we were looking at and what we were looking for. And obviously, those of you that were there saw that things played out. Right, and it's all rooted in the things that we talk about here in terms of my decision making, how I make the decisions, why I trust it in the first place. It's talked about in the hopes that you can go and apply it and start to trust yourselves as well. All right, but overall news vibes that we're looking at, beginning of the week, it's going to be a little rough, possibly. We'll see. But Wednesday to Friday should hopefully open up. PMI is also a pretty vicious news event, so that may send some fireworks in the market. Thursday, Friday, in my opinion, should be the time where we focus on, okay, this is going to be normal risk, possibly, depending on what we see, obviously. All right. So, yeah, moving along from that, let's see. Right. So we saw that the currencies, they followed exactly what we talked about too. We said higher prices for the indices, lower prices for the DXY. Same thing for the yields, right? Lower yields give us a run higher. Excuse me. But then a large wick, which ended up closing down in a weekly indecision candle. But for the most part, it respected this order block. We've been focused on this order block pretty much for the last week or so, and saying that, if that stays intact, and depending on what happens from this fair value gap, which is also a fair value gap order block combination, that'll decide pretty much where we're probably going to look to favor. Okay, and we could see how it's chosen to spend a lot more time into this fair value gap. And if it was going to be extremely bullish, in my opinion, we would have probably given a pretty strong response off of that. But because we didn't see that, obviously, with the turn that we saw as well, pushing lower and rejecting from that order block area we've been mentioning, that has influenced DXY to also favor sell side. That in turn has also allowed for higher prices in the currencies and higher prices in the indices, specifically the NQ, which is what a lot of my main focus was on this week. I also called this 8-hour fair value gap in the private community as well as in the free community on Discord. I said, watch that. It's probably going to deliver us to more of the fair value gap above us. If we look at the daily chart, right, if you remember, I was pointing out these highs saying that it's too clean up there. It's way too clean. It's probably a lot easier for them to want to go higher. The yields look like they were favoring possible shorts. The bonds, we called on the way to this fair value gap. We called for price to want to possibly reach up there if it was to respond off this bullish order block here, which it clearly did. And the draw from the last 2 weeks, not only last week but the week before that, we were calling for this as a possibility, right? And then once it got above this order block here, we mentioned that it's likely to reach up into that. Whether it filled the whole thing or hit it and chose to reverse, that was something we were monitoring. But all the way up into this fair value gap, we were in line with what was taking place, and obviously that assisted in the consistent identification of draw and liquidity for the last 2 weeks, from last week and the week before that, right? And I'm assuming that what we discuss here is also going to allow us to have a similar performance for the coming week, probably for the rest of the month, to be honest. We're in mid-month, right? So the monthly candle, if we look at the monthly candle, see what that looks like, right? So far it's been a bearish monthly candle, We're halfway through the month, so we'll see if that changes at all. We have this monthly fair value gap here. All right, so we'll observe and see if this can stay below the monthly area here. That would be pretty indicative of price still wanting to be heavy. But we can't lose sight as far as where price is at currently. We're still inside of an area that could look to want to rally. All right, so far we're going to still favor until proven otherwise that price is going to continue to seek lower prices in the yields plus in the DXY. We have this order block. We have a fair value gap here. We have a swing low. So the line in the sand entirely for a more extended, longer term shift in trend is going to be if we close down below the midpoint of this order block on this weekly time frame. That would solidify my opinion that price is now probably going to look to try to seek even further, right? Each of these candles is a weekly candle. So each low can be classified as a possible target if price is looking to fall. Same would be the case if we see price end up turning from here, maybe getting above this order block again, above this fair value gap, and then using it as support. We also now have a bearish order block, which could also be justified again even further if we do close down below the midpoint of this order block here. You could see how previous week pretty much aimed for that exact level, right? You could see the check mark was there, right? You saw the lows that I laid out well ahead of time as a possible target, and you could see that we've came directly to that. Right? Everything's systematic, everything is repetitive, and although the lower time frame delivery has been a little shaky for the last month or so, in January and then the start of February, been a little difficult for some. Through all the noise, though, if you root yourself on the higher time frame, whenever in doubt, zoom out. Okay, like if you can't figure out what the 1 hour is doing, what the lower time frame, 5 minute, 1 minute are doing, just move up, and then trust what you see on the higher time frame, rather than marrying that lower time frame, because this is what the market's going to favor. It's going to favor the higher time frame delivery. Yes, it's slower. Yes, sometimes it'll feel like it's taking forever. But it's better to have that feeling than have the feeling of regret or blown accounts or wasting money on retries or whatever it's called, right? It's better to just be patient and deal with the pain of patience rather than the pain of lacking discipline. It's much more heartbreaking to feel the pain of regret versus the pain of patience. So you want to definitely keep that in mind. Whenever you're feeling like, I need to take a trade, or you're in a rush, trying to rush yourself, keep that in mind. You got to pick one, because you're going to face one or the other. You're either going to regret taking a trade and lacking discipline, or you're gonna be upset with the fact that it's just taking forever. You shouldn't be upset if it's taking forever anyway. Yeah, it's a little annoying, but at the same time, you got to realize that not everything is going to move large ranges every day. There's news events. There's many things that can force price to consolidate. Maybe there's a crack in correlation across the board, across all assets we look at, from the currencies, the bonds and yields, the indices, commodities. Maybe they're all consolidating, right? If the bonds and yields are consolidating, that tells you that we're probably not going to see large ranges, right? So that's why, again, the bonds and yields are so important, right? But for the most part, for the yields, looking at what we see currently, we're going to go into the week assuming that because price ran up here and we have aggressively pushed off that high up here, we're going to assume that because it's spending so much time at this level, unless proven otherwise, we're going to continue to monitor how price looks to favor shorts. If we do see price pushing up from here, right, you can see the weekly bearish order block it responded off of very aggressively, very strong move. The only way that I would consider the fact that this is going to have a trustworthy run higher that we could then utilize across the DXY, in terms of thinking that, you know, DXY is maybe going to be bullish over bearish, we need to see price get above this fair value gap again, right? If we can't see price get back above this fair value gap, this is my trigger point, okay? If we see price start to really ramp higher, say it runs back into this bearish order block here and breaks past the midpoint of that, that in my opinion is the green light that price is going to then try to possibly target these equal highs up here. There's also SMT at these highs, which has, from this order block on the weekly chart, led to this response to the downside. So all these things justify the move that turned price back towards the lows here. We have relative equal lows here, relative equal highs up here. Again, this fair value gap here is what I'm going to be monitoring to see if it stays below and uses these quadrants as resistance, dynamic resistance levels. All right, so we'll make that blue. All right, so all these quadrants in here, I prefer to see price stay below the midpoint. We also have a new week opening gap here, right? So we have multiple levels in this area that should hold price and potentially not even allow it to get back up into this level here, right? Into this bearish order block. We have up into the midpoint of this bearish order block to continue to trust that these equal lows down here are probably going to be targeted, given the response and the framework that has been presented pushing price away from this high after this run on stops up here, after the run on stops over here, along with this coupled SMT that we see here as well, right? Lower high, higher high, right? We could also see this is a weekly bearish order block, 50% level on this 5-year. So we see the trio, right? The trio of yields, and we see the different behaviors that are taking place that can help us justify this downside move, right? All of this is confirming possibly what we see in the DXY. We saw a downside delivery in the DXY, attacking sell side we've been pointing out for, you know, ad nauseum for the last like 2 weeks, right? This delivery here, when you come over here to the yields, is fully justified and highlights the reasons that we can trust it continuing unless proven otherwise. What proves us otherwise? If price can't stay below this fair value gap here, below this monthly fair value gap level, right? If it just breaks above it, and then we see the midpoint of this bearish order block get violated, it starts to use maybe this down candle, right? Say it pulls down into that, uses it as a bullish order block. Or maybe it uses this volume imbalance once it gets back above it. If it does that, if it chooses to do so, comes back, use it as support. If all those things start taking place and we break through the midpoint of this up candle here, again, that's the green light for us to then look to target maybe these highs here. And then again, similar over here, we have equal highs up here, right? Maybe it ends up looking to target that as well. If you take a look here, didn't quite meet that fair value gap. I was about to say it hit that, but it kind of hit the low of it, or got very close to hitting the low, and they kind of just pushed away. But nonetheless, there's a lot of evidence providing clarity that we will continue to see this possibly look to seek sell side. And if we look at this weekly time frame, we also now see relative equal lows down here coupled with a fair value gap. Right? So we're going to assume until proven otherwise, right? What proves us otherwise? Right? What goes against our trust in price looking to continue to go lower? If it, again, breaks through this inversion fair value gap potentially, right? If it gets above that, if it gets above the new week opening gap here, that's what this gray area is highlighting the previous week. If it gets back above that, use it as support. If it breaks through the line in the sand for bearishness, which is the midpoint of this order block here, we then look to trust that price is likely to go higher in the yields. And then that translates to, for the most part, DXY going higher as well. And that would then also send reverberations through the indices, ending up in them going lower. Right? So does everything that I just mentioned here make sense? Does the viewpoint as far as what we're looking to see take place, what we're favoring, and then what would change that favor to the opposing view? We're favoring shorts, right? We want to see if there's going to continue to be evidence to support the relative equal lows down here being attacked with this weekly fair value gap as a draw on liquidity. Before that takes place, all these other candles lows here, those all become targets as price looks to print lower, if that's what it continues to validate and respect as we go into the new week. The things that change that is if price punches up here, the line in the sand for me is this middle point of the order block. Why is that the case? Because when we're validating a move, like depending on what time frame you're on, since this is the higher time frame, these levels are going to be more important than seeing the levels break on the lower time frame in conjunction with this, right? So we have to use 3 PD arrays that are supportive of the move going in a particular direction. In this case, bearish PD arrays have to support price continuing to push lower. We don't want to see multiples of them being broken. And our process has to do with 3 of the opposing PD arrays getting broken that are supposed to support the move that we're trying to justify. In this case, we're trying to justify sell side being attacked, right? So if that's going to be justified, volume imbalance should hold. It shouldn't be blatantly violated. Volume imbalance should hold, shouldn't be blatantly violated. This inversion fair value gap potentially should not be blatantly violated and just completely smash through it. This monthly inversion fair value gap that could support us going lower, that should stay inside of it or get below it. It should be justified, right? So we can further justify our move to go lower. If that responds and breaks through the midpoint of this, because if it hits that and violates that, we have 1 fair value gap, a monthly fair value gap, 2 volume imbalances, and a new week opening gap, an order block, and then the midpoint of that order block. If that's violated, who in their right mind is going to continue to try to force sells? Does that make sense? So when you see things like this, you have a line in the sand based on multiple PD arrays going against your assumed narrative that would justify a trustworthy change in your decision making. So then you can comfortably adjust to the other side. And because we're identifying these things in the bonds and yields first, right? If that justifies evidence that indices or the DXY, given the relationship that the bonds and yields have, if it justifies a change in those markets as well, because we have the back end validation in the bonds and yields, we're then able to start in a trustworthy way, adjusting our view from one side to the other in the DXY and the indices, right? So I hope that makes sense. Very important piece of the process in terms of narrative identification and how you can be flexible and adjust. When is the best time to adjust? Because if what I just mentioned does not take place, you are not permitted to flip-flop unless you understand countertrend operations, right? How you can navigate inside retracements inside of a trending market towards a particular direction, because there's a process with that too. I kind of spoke on that on this YouTube channel. If you want to go check out that process, you can go look at that video. I'll link that actually in the replay, up above in the corner or somewhere on the page or screen. But yeah, so again, I hope that makes sense. That's our validation invalidation process. It's a very similar thing also if you're on like the 1 minute time frame and you're inside of a move, like you take an entry that you're expecting to go higher, right? For example, that's in line with a higher time frame bullish idea. If the lower time frame starts to totally disrespect things, that's when, and you get stopped out. That's when you have to zoom out and look, okay, is everything still intact? Is everything still doing what I'm assuming it's going to do? So compare that to what normally you see traders doing. They take a loss and they don't even look to identify what's taking place. they take a loss, they're emotionally charged, and then they go right in trying to take another trade, forcing the fact that they're trying to see something take place that they want. Versus what we just mentioned, our validation invalidation process for a particular idea. Zooming out, right? You take a loss, zoom out 1 or 2 time frames. If you can't justify something, make it sense there, zoom out even further. And keep in mind this 3 PD array validation invalidation process, because when you identify it on the higher time frame, that gives you a lot more room to manage your narrative and bias, right? It gives you time. Bias changes on a day-to-day basis because there's retracements, there's consolidation in a trending environment. There's things that take place, right? Large ranges lead to small ranges in a trend, right? So bias itself could change. It could be a bearish day and a bullish trend on the higher time frame, right? Maybe you're in the manipulation phase of a bullish weekly range, right? Higher time frame's bullish, but maybe there's a couple days that are bearish. So bias changes, right? A lot of times bias in a bullish trend, right? If we're running higher, right? Maybe the bias is bullish during that instance, but then there's a justification for price to want to retrace and maybe reach into a fair value gap before it goes higher. That is an adjustment in bias, right? Because the bias went from bullish to bearish just to frame a counter idea seeking an opposing PD array to set up a continued move in that intended direction. See, so you can see from that example, bias can be subjective and change day to day. Now, narrative in terms of, okay, this is going to reach down below these lows here. So any type of run higher is probably going to be a retracement to continue and set up further sell opportunities, right? But our narrative is bearish. In that instance, if price does look to seek the low and retraces, that's when bias can adjust from bullish to bearish inside of, in this case, a bearish direction. Does that make sense, you guys? Nutty Fuff, I know it makes sense to you. Does it make sense to everybody with what I just mentioned? That's so important in terms of bias and narrative navigation and the difference between bias and narrative. Right? Most people don't know that there's a difference with that. But again, that's a testament to how detailed and thorough our analysis concepts are, and how deep you can take these ideas, right? And if you're trading in a bullish environment and you only want to submit to bullishness, that's okay. But even if that's the case, you don't like counter trend ideas. But even if that's the case, knowing how to frame counter trend ideas, knowing the difference between bias, which is subjective, can do many different things in a particular narrative, right? That is different than narrative. There's a difference. Narrative is more long-term. Narrative overall doesn't change on a day-to-day basis. Bias inside of a narrative does change because sometimes there's retracements. Sometimes price pauses and consolidates. And there's, again, as you guys know, there's reasons for that as well to anticipate. Okay? So I hope that makes sense. This is a very advanced view on things, but I hope I've been able to explain it and highlight it in a fashion that is understandable. How it can kind of start clicking lights on in your head. Like, oh, okay, so, when I'm seeing a higher time frame level that I think is going to take a while to get to, maybe I should start going in there and try to study and practice identifying when price has a large move, say, to the upside. How can I then get comfortable with identifying the retracement, and how can I frame that? Because that is an opportunity for me to adjust bias and really get in tune with the ebb and flow of the marketplace. So then in a bullish market, I can sell. So guess what? That opens up even more opportunities with, again, your one model, which also has continuation variations to it. So you see how the world just starts to open up. There's so many more opportunities than people imagine when they hear the term, I'm just going to use one model. You don't even understand yet how many opportunities there are. There's many things that people are just not aware of. And what we just mentioned in terms of identifying the difference between bias and narrative, counter trend idea framing and stuff like that, how, if you're in a bullish market, you could frame a counter trend idea from, maybe there's a bearish order block, right? But there's also a fair value gap here, but you're still trusting that it's going to go higher. Well, you can use that opposing bearish order block. If you think price is still going to go higher, you could frame that as a retracement point to then set up another retracement to something like this fair value gap to then go higher if that's what you think price was going to do. You know, so you could frame out retracements on the higher time frame as well. How do you do that? When price, if it's bullish, hits a bearish PD array. Many times that's going to set up a retracement. What would that retracement be attacking if price is still bullish narrative-wise? Well, it's probably going to look to retrace to some form of a PD array below us. In this case, it would be a discount array, right? And then maybe from that discount array, you could then get back in line with things. So you can start to back and forth understand framework and how price moves from one area to the next, how you can really get into the depths of price navigation, right? Again, I hope all this stuff makes sense. You know, if it doesn't make sense, please let me know. Because again, this is like this is high level understanding. So you don't have to think that you don't have any opportunities, or if price is going against the bullish trend overall, you don't have to sit there and think, oh, well, it's going down. I think the higher time frame is bullish, but I'm not comfortable with, you know, maybe taking a short because I don't know how far it's going to go. Well, now you know how far or what it's reaching for. It's going to reach for a opposing PD array. You know, if it's bullish and it hits a bearish PD array and it starts to retrace, generally it's going to reach for some type of array to then set up another move. You could frame the run higher up into, you know, that bearish point of interest, right? And then you could frame the opportunity once it starts to decline with a logical array below us if we're in a bullish trend. And then obviously all this logic can be flipped over upside down. All right? So yeah, I hope that makes sense. I hope all these things that we talk about make sense. You know, again, I mentioned the importance of the bonds and yields, why they're so important, why we start there, why we look at it every single week, every day. All right. So again, just to put a ribbon on what we are expecting going into the next week, we're expecting that, you know, price is possibly going to continue to justify price looking to drop. If you go to the weekly chart, this large wick here is not indicative of us looking to favor price going higher. Clearly, they're hitting a brick wall and pushing price lower again. So if that continues, we're going to continue to see DXY have a favor towards sell-side liquidity. Right? We could see that there's also the weekly fair value gap. Right? It's in conjunction with a monthly inversion fair value gap. So in this level, we have overlapping higher time frame PD arrays, plus this large wick off of a logical bearish PD array. Right? So we have enough evidence to justify that this is likely to favor continuing to go lower. Because that's the case, because we understand how powerful bonds and yields relationship is to the DXY and indices, the yield specifically, if they're showing favoritism to the downside possibly, then we're going to go into the DXY when we pull up that chart, and we're going to favor ideas possibly looking to submit to sell side delivery. Right? So yeah, I hope all this stuff makes sense. I hope the levels here make sense. I hope the counter trend idea makes sense. I hope the importance of bonds and yields makes sense. I hope that, you know, what we're looking for in this coming week for this market, and then obviously translated to the DXY, makes sense. Again, if at any time you have questions, just let me know in the chat, and I will be happy, ecstatic, matter of fact, to assist you in any difficulties you're having, because that's why we're here after all, right? So yeah, that is our opinion on the bonds and the yields. Okay, let me send that to the private community. All right. All right, so that being said, let's move on to our bond conversation. So given the fact that, we've come to a determination of what the yields possibly can do in a logical fashion, all the things that we want to see in the yields, because we believe that there should be some type of interest in price wanting to look to favor downside delivery, we should see the opposing view here on the bonds. All right. So in the view of keeping things clean, or as clean as I can, without not showing you something that's super important or having you miss something that's super important, I'm just going to talk about this. So we have this fair value gap here, similar to what the yields have. Right? They have that monthly fair value gap that could turn to an inversion. Because this is reverse correlated, same as the DXY is reverse correlated to the indices, we also have a fair value gap in here as well, a monthly inversion fair value gap. Right? And if it stays above that, that's a good area for us to identify possible inversion, possible support, possible reason for price to utilize that area as an area that should block price or continue to favor price going higher, block it from going lower. We do have this large wick here. If you guys remember, we always talk about large down wicks and a downtrend, large up wicks and an uptrend. We do have this wick sitting here. Prices used the not equilibrium, but the midpoint of that wick from or up until now. Right, it ran up there, hit a high right at the midpoint of the wick, showing validity of how important these levels are too. And we saw price come off of that. So again, we're going to see if this response ends up pushing price back below this, then that's going to justify us not really being as bullish as we would like. But if it stays above this fair value gap here on the monthly, and it ends up smashing through this, closing above it, then longer term, we're probably going to reach up to these highs up here until proven otherwise. Okay? And obviously this is a trio, so same things take place across the board for the most part. But yeah, let's go to the weekly chart now. Turn back on the annotations. All right, make this bigger. Similar to the large wick that we saw here on the yields, pushing price lower on this weekly chart. Right, notice how the wick came up and aggressively turned around because the counter trend characteristics behind these assets. You could see how a similar thing took place here. What did it reach into? The weekly bullish order block that I mentioned we want to watch for response from and how the behavior would be. Okay, we could see how that has beautifully delivered. So this is indicative of price looking to continue, and we have these levels I've mentioned here to help support the idea that we're going to continue to trust that there may be continued favor to the buy side. And of course, if that changes, right, price ends up getting below this monthly fair value gap, if it ends up just like breaking through this weekly fair value gap, ends up really hammering lower, and we lose this low here, then obviously we would look to possibly target down below here, this low, this low, and whatever else is over here. Maybe a volume imbalance. That's way too far away for us to assume. And there's just not enough justification unless we get some type of really aggressive push lower. So we're going to continue to, in this case, favor that price holding here and continuing to, wick lower and then aggressively push higher. In conjunction with the opposing view with the yields, we're going to continue to trust that this is going to continue to go higher. We have this weekly fair value gap level still allowing justification for possible targeting up here if it does continue to keep all these things that we're talking about intact. We have this very large wick here, so the next candle is going to open, and now we have this large wick midpoint and all the quadrants to utilize as dynamic support levels, supporting as price looks to deliver to the buy side. All right, same across here. We had an SMT here actually. So that's kind of interesting. But again, we don't have enough justification unless price gives us a strong move lower here to then look and confirm further shorts because of what the yields are showing us. They're not looking like they want to support that idea. And for the most part, these things faithfully work in reverse correlation fashion. All right. So we're going to continue to monitor off the bearish sentiment potentially continuing in the yields. We're going to continue monitoring to see if these levels will continue to hold price in a way that's going to keep price going higher. All right, we got relative equal highs up here. We have relative equal highs up here. All right. And again, if it just starts smashing through these levels, the weekly fair value gap gets below the monthly fair value gap. You can see there's also a daily fair value gap here. If it just starts blasting through that, and then we lose this low here or the midpoint, right? So we have all these fair value gaps I just mentioned that are layered on top of one another. We have the quadrants of this fair value gap. We have a volume imbalance. If it was to violate this low down here, that's multiple PD arrays getting violated opposed to our assumed interest to want to see price go higher. So what does that mean? We can faithfully adjust, and if that takes place, the yields, you can be confident that the yields are probably going to do the reverse of that as well. The yields would end up going higher in that sense. And then again, that would continue to be a rolling indicator, a forward-looking indicator, impacting the DXY and the indices along with the foreign currencies. Okay? So again, I hope that makes sense. I hope what we're looking for in this market makes sense. We're looking for possible continued favor to the buy side if all these levels stay intact. And we're looking for shorts or sell side delivery to continue in the yields, obviously, again, unless we're proven otherwise. All right? Because that's just what we're being presented with here. Behavior from the order block here, and behavior from this order block here as well. So we'll continue to see if that's going to take place and continue. Now, because we have that back end information, we now come over here to the currencies. Let's see what the currencies are doing. Okay, so if you look at this, it looks pretty interesting that we see the yields look like they may want to continue favoring shorts, which dictates the sell side interest in the DXY. And then opposed to that, shows interest in the foreign currencies and the indices looking to favor possible buy side targets. We can see from this weekly time frame, let's actually do what we did in the other market. All right, we can see we're on the monthly chart now. All right, it's a monthly candle. The month has been pretty bullish. If you look and see the euro here, I mean, we have a pretty obvious volume imbalance in here. We have a very obvious previous month's high. We're very close to it. I wouldn't be surprised if that's what they look to target. But overall, we may get excited enough if everything stays intact the way that it is. It may be excited enough to reach this volume imbalance. The high here, so another monthly high. And then also eventually maybe even reaching into this fair value gap up here in terms of the monthly FVG. So, and if that is the case, and that's the overall narrative, and it continues to support that narrative, we have narrative to justify our bias navigation on a week-to-week, day-to-day basis, probably for a little while. You know, that wouldn't change in a fast capacity, especially since we're at such a high time frame. And if it just continues to validate that this is, in fact, what price is favoring across the board with all the other assets included, then you can start to see like, okay, I can actually determine narrative for weeks on end, right? And be confident in it, even if it goes against me in some capacity. You know, it just could be looked at as a retracement in line with the larger view, you know, the higher time frame direction, which again, that's the sale in the market, right? That's what dictates what's going to take place on that lower time frame for the most part. And then again, bias and narrative are different. So if it's going to reach up into here, that doesn't mean that sell side isn't going to be offered. You know, counter trend sell-offs aren't going to take place. That doesn't mean that at all. You know, if we can justify this continuing to reach up into here, and we see counter trend ideas and we're able to get comfortable with this understanding, we're able to get into counter trend ideas safely because we know they're counter trend ideas. And we could cut our risk, only take one attempt or two attempts, okay? And know that they're short-lived, or that they're going to be short-lived. So you're not going to hold for 1,000 points. You're going to get in and get out being comfortable with taking the minimums, because the minimums get you to profitability quicker, as I mentioned on my YouTube channel last week, and in a short that I posted, or a reel I posted on my Instagram. Minimums can get you to where you're trying to go quicker. It lowers the stress, and it's a lot easier to get 20 to 30 points in the NASDAQ or 5 to 10 in the S&P versus trying to always hit home run 100 handle moves when 100 handle moves don't always take place. You know, large ranges lead to small ranges, news events, geopolitical chaos, chaotic things take place, right? So if you can attack minimums, you can get to 20 to 30 points multiple times faster than you can, in many cases, get to one 100-point move in the NASDAQ, or 100-point move, especially in the S&P, right? Not that it's impossible, obviously, and that you shouldn't strive for that, but you can literally live in the minimums. You know, for the most part, when I go into the chart, I'm aiming for the minimums, bare minimums. Like, that's my main goal. If I finish the day, I have to at least be able to say that the minimums I've set for myself are accomplished. You know, I'm not demanding more than that, because I know after all these years, after almost 5+ years of trading and ups and downs and hurting myself and recovering losses and adjusting my rules, dealing with pain and suffering, after all that experience, I've been able to realize that, the minimums are fine. Lowers your stress, gets you to where you're trying to go quicker, especially if you can identify narrative and understand where the bias is going, and you can navigate things in any consistent capacity. It's just a lot easier, not like, it's easy. Like, nothing in trading is easy, obviously, right? But it's just a little bit easier, and when in an environment that majority of things are difficult, being able to identify things that can make your life a little easier, a little more manageable, a little bit faster to progress is obviously always recommended. That's why I talk about this all the time. Minimums pay the bills, okay? And the minimums can get you to unlimited amounts of prosperity if you let it. All right, so again, this is something that I'm definitely going to keep in my mind. This weekly fair value, or this monthly fair value gap up here, that could end up continuing to be favored. If that is the case, we have a pretty long-term narrative that could really drag us off. I mean, this month could reach that possibly, or maybe this pushes up here. Maybe next month, half of the month ends up, maybe declining a little bit, getting inside some of the price action in here on the monthly candle, and maybe the next month will be bullish and offer a bullish power 3. Notice how this was a bullish candle here. Power 3 works on the monthly chart too. When the month opens, right? If you look at things from like a 4-hour perspective and you stretch out the entire month and you map out the start of the month, which is the open price of the month, you could start to identify monthly power 3s, right? So then you can go into the start of the month understanding if I'm bullish, the start of the month may end up being bearish. And then the rest of the month may deliver if I have a higher time frame bullish narrative outlined. Does that make sense? I hope that makes sense. Just another layer of how important power 3 is as well, aside from everything else. So we'll see what takes place in regards to that. But yeah, that's definitely something you want to monitor and go in and study if you haven't. The monthly power 3, weekly power 3, and of course daily, even hourly 4-hour power 3s. There's power 3 constantly, right? So depending on what kind of trader you are, definitely something worth exploring. But yeah, so I hope it makes sense in terms of some of the views here on this particular asset. We have a large wick here as well. All the quadrants, the midpoint, you could see how perfect the midpoint got traded to as well. Right, you could see how beautiful that was. Bang, right to the midpoint perfectly. All right, so Let me actually go back to the monthly chart. Don't forget, right? You always want to mark off your previous month's high, previous month's lows. Okay. In this case, previous month's high was already taken for GBP USD. But we have a perfectly available previous month's high. We have an inside month so far for the euro. That means, you know, the previous month's range or previous week's range or previous day's range, we haven't been able to break out those extremes. So it's been just inside of the previous month's range in this case. Right, so there's a similar thing you observe when you're looking at the daily and the weekly too. So yeah, we have a previous month's high here that's definitely on its way to potentially reaching into this extreme level up here that we mentioned, which in my opinion looks like a pretty high probability. On its way to trying to accomplish that though, we can clearly see that there's a previous month's high here that could be utilized because we're so close to it. Okay, so that's definitely something that's going to stay on our radar in our live calls. We're going to continue to monitor that because that's going to probably be important as far as a draw on liquidity. Pretty interesting how that is also, I think, an equal high if we go to the daily chart. Yeah, we got relative equal highs in that sense, right? This is a daily high mixed with this high. So pretty clean buy-side liquidity up there. In a market that is being justified to go higher based on the bonds and yields, right? It looks like we have shown a lot of interest in looking to go higher, right? So, you know, shift the market structure, fair value gap, run on stops here on GBP USD. Prices then continue to march higher and blasted through all targets we've laid out, weekly highs, wick of this daily wick, right, the midpoint, and then we just looked at the monthly wick, right? This hit the monthly midpoint of the wick perfectly. So all these things are in alignment. Again, I wouldn't be surprised even if it is going to go higher if the week opens up and or the next day, right? Mind you, this is Friday's candle, so Friday's high and Friday's low are also worth noting because, you know, we may look to decline, take out Friday's low, aka this candle's low, which is also in conjunction with this fair value gap here. And then we'll see the response that comes off of this daily fair value gap. That may set us up to run deeper into buy-side liquidity, presenting us with, if the next week is going to be bullish, you know, that may present us with a power 3 dynamic with the manipulation and accumulation taking place at the start of the week, just to punch us lower in a counter trend fashion to get us down into this fair value gap, just to justify and set up a lower price level for smart money to get in and ramp up their buy-side liquidity targets and entries as a result of that. All right, so I hope that makes sense because that's what I am looking at here. Friday's high and Friday's low, previous month's high, previous month's low, previous day's high, previous day's low, previous session highs and lows, regular trading hours gap, new week opening gaps, new day opening gaps. All those things are things that you want to have identified in your chart. You don't have to have them on the chart, but you have to have them identified because those are all continuous, repetitive, always present levels that price reaches for in terms of liquidity. So if you can make an argument that one or multiple of those levels look like they're going to be targeted, then you a lot of times have a good amount of draw on liquidity perspectives or prospects. And then, of course, you add on the PD array matrix. Then you have a bunch of different PD arrays. And if there's some that are in close proximity, in this case, maybe it's highs or an order block or a fair value gap above price, or in this case also, we have this daily fair value gap down here. You have even further targets that are continuous, repetitive, always present, right? But the ones obviously that are important and the most relevant are the ones that are closest to you in price at any particular time, going into any particular day, week, or month, or session. All right. See, I hope that didn't go over your head. Right, it's very important stuff. I've covered a lot so far. But yeah, so I hope it all makes sense here. Nutty Fafa, appreciate you. So it makes sense. Perfect. So yeah, that's what I'm gonna be looking for. I'm gonna be looking to go ahead and study price doing something like this. Right? I don't normally even do this type of thing, do all this, because you never know, things could change. I'm pretty confident though that we will see something like this take place until unless we're proven otherwise. And if we're proven otherwise, again, we have our process. We talked about validation, invalidation. So you could take the principles that we talked about for invalidation, validation, and you could now scrub over to here. Right, we have this order block. We have a fair value gap in here on the higher time frame, and then we have a swing low. All right, this bullish idea is invalidated 100%, and we start targeting sell side more long term in terms of narrative. If this low breaks, right? If it was to smash through that, that's 1, 2, 3, 4, and all these new week opening gaps that would have to be violated if price gets down below that. And according to this two-day chart, or even the daily chart here, all of that sounds like, it's justifiable. And you could see that again, it's another repetitive system. It's a process, repetitive system of validation, invalidation, like we talked about early in this video. Same with this whole process every week. It's all the same, consistent all the time. Hopefully it's very easy to implement. I've heard lots of testimonials that it's very simple to apply, because I'm not a rocket scientist. Okay, I'm just a normal person like you guys. And I need things explained in a simple way. So in order for me to understand, I have to be able to take whatever's complex and being taught, and I have to translate it into my own language. And I hope that, the things that I break down, how I break them down, makes sense to you, So again, if there's ever any questions, leave them in the chat. If you haven't already, definitely like the video, subscribe to the channel if you haven't already. If you get value from the content, also definitely share and turn post notifications on. It's greatly appreciated, and I don't want you guys to miss the gems that we just dump out constantly on a daily and weekly basis. Because it's been fascinating to see how many people have really revolutionized their trading, even just being here for a couple months, only on YouTube. That's aside from the private community students that I have that are just mind-bogglingly just killing it. It's insane. It really is. But yeah, so I don't think I missed anything here with a weekly high. What is that? I think this is another monthly high, if I'm not mistaken. Yeah, previous month's high. So if you look right here, right, the open for the month here, let me just highlight this real quick, and then we'll move forward into the indices. But like I was saying, the monthly chart also has power 3. You could see how on the bottom portion of the screen, you can see the date, February 3rd. Price opened up here to start the month. Price dipped lower, created a low, and then ever since it's been going higher. So what does that tell you? The best buys come from below the open price in Power 3. Well, the best buys came from down in here, right below the open of the month. And ever since, price has been just delivering higher. We've been favoring higher prices. We've been favoring higher prices here in the indices. And of course, all that has been justified from the process we went through and that we continuously go through every Sunday with the bonds and yields. Eventually you're going to, hopefully, I don't know, maybe y'all will get annoyed at doing the bonds and yields constantly. But hey, you see consistency and you want to be consistent. And I'm showing you something that probably majority of people don't even utilize, because most people hear ICT's bonds and yields conversations and they skip over it because they want to know what the indices are doing, disregarding the whole process that's laid out. That most people just totally ignore, because they're lazy, right? They're just freaking lazy. But yeah, you can go back into your charts, and I definitely recommend that you guys go study Power 3 on the monthly chart, weekly chart, daily chart. And then if you feel more confident, start trying to do it on every hour, every hourly candle. Observe what that Power 3 looks like, obviously in conjunction with what the higher time frame does. And you'll see that there's even more frameworks that you can operate within, even from a 1 hour basis, you know. And I know some traders that use the 1 hour chart as their daily chart because they're seconds chart traders. You know, they don't really like the higher time frame. I don't see why that would be something people would want to do. But, you know. All right, for sure, Maddie. I appreciate you hopping on, brother. We're going to be live in the private community tomorrow as well in the morning. So don't worry. You're not going to miss much, as always. But yeah, God bless, brother. Have a good Sunday. But yeah, you can see the open here. Price dropped. If we go to the monthly candle, right, just look at it real quick. You could see that the monthly low is right there, right? The monthly low is 02320. All right, go to the daily chart. 02315, right? Ish, right? Up in that vicinity. So yeah, Power 3 is universal on every time frame. So definitely don't discount it. Just because you have an entry model like the YouTube model, a breaker, optimal trade entry, you know, any of the laundry list of entry tactics that are offered. Power 3, things like the market maker buy and sell model, all those different models can be layered in conjunction with those. That's why I use 4 particular models. I use market maker models, breakers, the YouTube model, and institutional order flow entry drill for continuation, aside from all the continuation variations that we talk about in all the different models. All of them layer on top of each other. Sometimes there's a breaker and a YouTube model. Sometimes there's a breaker or a YouTube model inside of a breaker, allowing you to get into the breaker pattern sooner. Sometimes there's, you know, all that stuff taking place inside of a market maker model framework, right? There's multiple market maker models inside of the larger time frame market maker models. As it creates the buy and sell side of the curve, each little component in the higher time frame market maker model has more market maker models presenting and creating that entire higher time frame pattern and delivery. And then inside that, there's breakers, YouTube models, optimal trade entries, institutional order flow entry drills. There's, you know, fair value gaps and order blocks and all these different things presenting opportunities nonstop. Okay, it's like, it's incredible. And, you know, what really opened up my eyes to that fact was dissecting market maker models. Like, it just shows you how insane things are, you know? And then once I figured out that market maker models have smaller market maker models inside each of the phases, creating that larger market maker model, I took that idea and I took it into all the other models that I use for entry, and I discovered that all the models that ICT teaches have continuation variations. There may be one that sets up the whole large portion of the move, but inside that first delivery, if you miss it, just wait for the rules to take place again on a time frame either below the one you missed it on, or just, you know, move up a little bit and try to see if there's like maybe one time frame above, maybe there's the model performing again there as well, right? Like, it's what I just mentioned there is something that goes over everyone's head. Like, they don't realize this. And it's like one of the biggest, most important things I ever, to this day, have learned about ICT concepts. You know, it's literally insane. Okay, if you guys got questions about that, definitely let me know, because that's a topic I love talking about, by the way. It's literally insane. Literally. But yeah, before I get too much into those different conversations, but yeah, I hope all this stuff makes sense for the currencies. I'm assuming it could go higher. This is what I potentially want to see price do. Let me send that out to the group. Just real quick. If you guys got questions, let me know in the comments or in the chats. Chat. Sorry guys, give me 1 second. Just sending it out to everybody, both in the free community and in private community. All right, so yeah, okay, so no questions. All right, so now let's move to the DXY real quick. I know it's a weekend, you guys probably got some things to do, so I'll make it quick. So yeah, given the yields looking like they want to continue favoring sell side, given the fact that the bonds look like they may want to continue favoring the upside, looks like the currencies, normal currencies or foreign currencies, are looking like they may want to favor price going higher potentially. Because that is the case, until proven otherwise, and being proven otherwise is basically watching 3 PD arrays break to the downside based on this daily chart. Because remember, narrative comes from the monthly, weekly, and daily chart. Doesn't come from the lower time frame. Bias can go from those lower time frames inside of a larger, higher time frame narrative, which we explain the whole difference. If you want to rewind and go check out that whole little section of explanation. But yeah, so 3 PD arrays being violated, that would be this low being violated. And if that low was to be violated, then anything favoring buy side would then turn off. Given the bonds and yields look like they're favoring the currencies and indices to go higher, DXY looking like it, based on the yields, should want to continue favoring going lower. We should continue to see, price looking to retrace just to go higher. Possibly look to target this level up here. I mean, that is pretty far away. So before it gets to there, I mean, we have this area here that I believe is an order block. Kind of I guess you can make the argument that that's an order block, but I'd actually rather use this. Yeah, I mean, this may again look to want to continue pushing a little bit deeper into this order block here. We'll see what happens. Remember what I was saying about the counter trend idea framework? How if price comes up into if we're looking for price to be bullish, but price pushes up into a bearish PD array, in this case, this bearish order block here, this bearish order block on this weekly chart here may be the catalyst that triggers this retracement into this fair value gap, which again, I want to see if we can end up, retracing into this and then possibly going higher given the things that we've talked about today overall, right? But you can see if we go to that, 2-week chart, there's a order block there. Price looks like it's maybe rejecting. If we drop down to the daily chart with this in mind, if we're assuming price is going to possibly continue to go higher, we could potentially frame some type of counter trend idea looking to target this fair value gap, Friday's low, and then whatever it does in there will determine whether we're going to continue favoring buy side given our higher time frame analysis, or if it breaks down and starts violating multiple PD arrays, we'll then safely be able to adjust from buy side to sell side delivery and be confident, smiling the whole way doing it. Okay, so yeah, it's very similar idea with what the Euro's doing. I do see that there is an SMT here. I didn't see that earlier. But again, we'll see what takes place with that. The only way that I'm going to assume, given the bonds and yields, what they're favoring, how they're supporting price looking to go higher in foreign currencies and the indices, unless that changes, I'm not going to try to go against what's taking place currently in the market. We don't pick tops, we don't pick bottoms. We don't sell equal highs, we don't buy equal lows. Okay, we have to, allow things to take place in order for us to change particular ideas and opinions. Right? And again, narrative is more longer term. Bias can shift, right? This narrative is possibly bullish. Bias, though, can end up being bearish just to set up continued bullishness. Okay, so again, that's the difference between bias and narrative. Narrative doesn't change every day. Bias does, right? Or it could, because there's retracements, consolidation, so on and so forth. All right, so I hope that all this has been clear for the currencies. So just to make sure, right? And again, similar thing happens for this, right? We got to see what this order block is going to do. Midpoint of this order block definitely solidifies my interest in price getting down below, attacking the sell side here. We got this fair value gap in here. We want to observe and continue to monitor whether that's going to act as a inversion fair value gap. Okay, so currently, go to the monthly, We took out previous month's low. We do have this large wick here. If you break that into quadrants, we still have a lower portion, 25% of it or 75% of the wick, that could also be identified as a potential targeting factor. All right, so let's just mark that just for completeness sake. So let's mark that off. All right, so let's go to the weekly real quick. So again, we got this weekly low, but that is now not only a weekly low, it's actually a order block. Okay, so let me actually put that there. So that being a weekly low annotation, let's put that as a weekly bearish order block now. So again, line in the sand for price not looking to go lower, given all the things we've talked about. The line in the sand is going to be the midpoint of this order block. Okay, you may ask why, right? Why would that be the case? Well, if you've been here throughout this whole call and the validation and validation principles make sense, multiple areas would be violated if we close above this order block. That would then turn us to target the wick here, and then these relative equal highs up here, and then possibly even the rest of the fair value gap on this weekly time frame, which would pull us up into here with an open area of liquidity. I don't think it's going to get back there though. I think again, there's so much evidence for us to favor shorts in the DXY that we need to be proven otherwise. Because last week was going to decide for me whether I was going to be favoring the indice or the DXY going higher given the order block and the fair value gap we were watching, because that has pretty much failed and we broke through that. As I mentioned last week, if that was to take place, then we're just going to continue to favor price looking to attack sell side delivery. Right, the larger wick off the highs, and it just, the yields are looking like they want to favor it too. So we have lots of justification, not just, oh, Christian thinks it's going to go lower because there's, some random thing taking place. No, there's a lot of evidence that has been proven over the last 5+ years and ICT the last 30 years that justifies price looking to favor this particular objective, in this case favoring possible sell side delivery, unless proven otherwise, obviously, right? And again, invalidation level is the midpoint of this weekly bearish order block. I will put that in here just for completeness sake. Hope it's not too busy for y'all. So I want to make sure you see everything that I'm seeing. So if there's any confusion, it starts to hopefully click. All right, so we got this weekly fair value gap. We'll see if that turns into an inversion. Right, we do got this larger one as well, but we'll just move that to the side a bit. As far as, so yeah, if we're going to see the currencies like we just talked about, foreign currencies, if we're going to look for this to take place, price opens up, gives us a bearish drop to present us with the possible bullish power 3 on the week next week, then a very similar thing should take place here as well, but in the opposing view, because DXY is opposed to the foreign currencies. Okay, you can see how everything is like together. It all marches together. Everything dictates what everything is going to do, and certain things influence certain things a lot more than others. Okay, but there's relationships overall in the market as a whole that are extremely valuable to understand, so then you can have a educated, justifiable decision-making process. right? So we have this bearish order block too. So we're going to continue to monitor how this weekly fair value gap is either respected or disrespected. Now, again, if price was to come off of these lows like it, come off of taking these lows like it has, and it was to blast through. Remember, this red line here is our line in the sand from that weekly time frame, looking at that weekly bearish order block. Okay? If it was to then, on this time frame, blast through this daily fair value gap, blast through this weekly inversion fair value gap, possibly here, right? And then violating the midpoint, closing above on that weekly bearish order block we identified, well, man, that seems like it's 3P to erase, all right? Doesn't it? Isn't it? Right? And if that takes place and we get all the way up there, there's really no logical reason for us to want to push price going lower. So what do? We would then adjust and start seeking buy side in a faithfully confident manner and be able to adjust our overall view on things safely and know when to do so. That's another very important topic. When do I decide to scrap my narrative or my bias? Right? When do I decide to adjust and go from one side to the other? It's not random, okay? There's a process. And as we talked about throughout this whole call, the processes are so important. You have to become a process-oriented savage as a trader. So then if your goal is to be full-time, you have processes to fall back on, and you don't have to worry about lifing, okay? And starting to feel like, you can't trade because your mindset's all screwed up. If everything's systematically process oriented over years and it just becomes like, second nature, like riding a bike or tying your shoe, then, anything that takes place, you're going to be able to minimize it. That's how you can work towards achieving emotionless trading. You're always going to have emotions and all that, but if you have your systems trusted and mastered in a very high level way, then you don't have to ever worry about it. You don't ever have to worry about emotions because you will prove it to yourself that every decision you make is systematic. Everything's in the market, decision making wise. If everything's there, you're going to take the trade because the system says so, not because you say so, because the system says so. And once you're doing it like that, that's how you can start to, really start pushing your way towards emotionless trading. Not that you remove them, but you're able to manage them when you're more system-oriented, process-oriented, and focused rather than, okay, I feel like getting into a trade, which majority of new traders deal with. And a lot of times people that trade for years and years and years end up, never having in their arsenal. Some people never achieve that because, for one, a lot of them don't have people telling them things like this. And explaining why it's so important and how you can go about attaining that certain piece to the puzzle. It's obviously very much doable, but again, it depends on your ability to create processes. All the things we've done today is systematic. Everything is continuously applicable every single week. Doesn't matter what kind of market it is, whether we engage or not. We have a system for that, like we've talked about. We have a system for narrative and bias. We have a system for validating and invalidating a particular narrative, right? We have a system or process that allows us to trade counter trend ideas if we need to. We have a system for managing risk and mitigating losses, right? We have a system for these things. We have a system in breaking down top-down analysis and finding what's important and what levels should be trusted and what ones shouldn't be. We have a system for psychological management, aka putting limits on your trades, understanding when to trade, when not to trade, right? These are all systems that everyone has to learn. If trading full-time is something people want to do at a high level, or if, trading as a side income is even an option, if that's something they want to do at a high level, there's no escaping it, okay? And that's why most people fail, because they're so lazy. They don't want to develop these things. They want to know what the breaker's doing today. What is the order block that I need to enter at? Okay. I don't care about risk. I don't care about none of that. What is the fair value gap that I should be entering? Although those are important, those things, if your systems are not intact, aiming to be a full-time trader with anything is very, very, very difficult, if not impossible for many. And again, it's just the reality. But yeah, so far, with those of you that have spent time here, let me know if everything makes sense so far. Okay? Because we pretty much know, just with what we've talked about, we don't even got to open the chart in the NASDAQ or the S&P, which we will, though. We can already have an assumption as far as what we think price is going to most likely do. We have all these background things that indicate and dictate what should take place or what shouldn't take place. But yeah, before we move on, let's definitely throw it in the chat whether all this stuff makes sense. Maybe we'll talk about key takeaways and stuff at the end of the stream, which we'll put a ribbon on it, probably about like 15-20 minutes. Everything makes sense. I appreciate you, Nutty Fafa, for telling me that. I'm glad that it makes sense. What about you, Tony? We got 2 more people on that I'm not fully sure who it is. But yeah, Tony, does all this stuff make sense for you too, brother? Just let me know. Well, Tony, again, if there's ever any questions you have, or even you, Nutty Fuffa, or anybody else, if you follow me on Instagram, you could just obviously DM me, or again, just leave things in the comments, and we could get all of it situated. But yeah, so again, this is what we're looking for in the DXY. All right, price possibly looking to continue to favor this idea. It may not get down here into from one swoop down into that level, but that's pretty much what I'm trying to identify, see if it's going to hold off and continue to press that. Again, invalidation level is up here for shorts. Okay. All right. Okay, so yeah, that's going to be our start of the week framework or assumptions. Okay, we want to continue to monitor whether this fair value gap is going to be important. Remember, we have Friday's high and Friday's low. If anything is going to take place next week that gets outside of this candle here, outside of this Friday's daily range, if anything's going to happen, if it's going to run higher and hit this fair value gap, or if it's just going to tank and drop off, Friday's high and low have to be violated first. So that's a consistent, repetitive, all the time system oriented thing as well, right? In terms of liquidity. I have a PDF coming out soon too, pretty much having to do with liquidity mapping, and kind of amplifies the different liquidity identification processes we employ here. I'll let y'all know when that is ready to send out. But yeah, so mark Friday's high and Friday's low as well. That's for all the assets that we've talked about so far: bonds and yields, currencies, DXY. So mark those out as well as previous week's high, previous week's low, previous month's high and low, because those could become important, especially here for the euro. Previous month's high could very easily be attacked next week, as the overall draw on liquidity, especially with this potential relative equal highs up here. We'll see what happens as well. We also got this wick here to monitor, see how the behavior is from there. That may trigger a retracement. That's a PD array, premium array, right? It may look to use that as a trigger point to retrace, maybe look to target, what is this thing? This is an 8-hour fair value gap? Yeah. maybe he uses that to punch down a little deeper into that, maybe even a little deeper until it decides to want to run away. If all that continues to take place, I'm assuming that's going to take place. Lower DXY, higher currencies, and then that should all translate, given the bond yields, currencies, and DXY. It should indicate that we're going to continue to see this march higher as well in the indices. Very easy, right? So all the work that we did in the back end makes it very easy to identify what's likely to take place when we eventually get to the indices. And again, that's a process. It's all a process. And given the fact that we trade the indices, and we want to be as accurate as possible, and most of us, started this trading endeavor with the goal of doing something profitable with it, it's best to be very thorough. And having the process and systems that we apply here hopefully can assist you in achieving that, as it has for me and my family, and many others in my private community. All right. So yeah, I think we still have a little bit more to go in terms of this. I think, yeah, we got a little tiny piece of it left. Again, I called this 8-hour fair value gap live. I said this 8-hour fair value gap in the free community, the free Discord, and my private community real time. I said that was going to be targeted. Price declined into it. I said the rest of the fair value gap would probably get filled. Didn't quite fill the rest of the fair value gap, but it definitely filled majority of it. Right? So we were on point. Down here, we were calling for these equal highs to likely be attacked. Because it was in consolidation, there was a possibility, if price was to break down, for price to go totally against that. But it didn't. And in the moment, we were able to gauge whether it was going to attack this level or not. Once it broke above this high here, I took this as a run on stops, shift in market structure. Right? Once it got above that, this fair value gap here ended up being a continuation variation of the YouTube model on this large time frame, on this 8-hour time frame. So continuation model happens everywhere as well, for all models, like we talked about and discussed this week in the previous weeks. All right, so we got a weekly fair value gap midpoint as well to observe as a potential area to target. All right, that's right here. All right, so that's another little area to pay attention to. And yeah, so we do got the 8-hour fair value gap here, but this is now also translated into a daily fair value gap as well. If we go to the daily chart, we could see that. So again, the low here that was punched into the daily fair value gap has now presented a Friday's low, so a Friday's liquidity pool that we can look to be used for smart money to possibly pair their possible continued buy positions, if that is what they're going to decide to do next week. They could pair their buy positions inside this fair value gap and attempt this area one last time, and then possibly use that as the launching pad during some news event that maybe comes out, and then just continue to deliver higher unless proven otherwise. Again, the bullish narrative does not change unless we violate the low down here. And again, hopefully I don't have to even really go over the reason why this low would be the invalidation level. If we even got down into this area down here, I would not be very confident in continued buy-side delivery. So let me ask you this as a group, with the 6 of you that are on here right now. Why would this end up being the invalidation level for buys? Why would this change our overall view? See if you guys are paying attention or have been paying attention. Let me know in the chat. And I'll correct y'all if you still don't get it. So let me know in the chat. because the low has been violated and it's going. Okay, so why would buys and my narrative interest for buys change if we were to break this low? Right? And so if we broke down below this low, why is this low important? Based on what we've talked about today about validation, invalid. Exactly. Nutty Fafa, you got it. Because 3 PD arrays would have been disrespected on the time frame that we're doing this analysis on. Because we're on the higher time frame looking for narrative and overall direction. So if something changes on this time frame, that's when things a lot of times change. Or if it does a similar thing against the weekly chart as well, right? So yeah, that's exactly what it is. Mind you, this process, this system that's extremely simple, at least I hope it's fairly simple to understand. It's extremely effective. It's ridiculous how simplistic this is. But the effectiveness it's literally breathtaking when it comes to validating a particular narrative that you're inside of and using the same system to then invalidate it so you can then safely adjust. And of course, mixing that with intermarket relationships and all that stuff, making sure all that agrees as well with the overall change. But that's a system. That's a validation, invalidation system. And it is highly effective. Very simple. Okay, it's not a lot of moving parts. It's if this happens, then this is what takes place. If it doesn't happen, then this is what's going to continue to take place. Right? It's very, very simple process. So I'm glad that stuck with you. I'm very glad it stuck with you. Again, go into next week and the rest of the year, the next 6 months, next month, next couple of days, use this idea. In terms of the higher time frame, use this idea for the next month, next couple months. And I'm telling you, aside from the leaps in understanding that are caused from you understanding the intermarket relationships between the bonds and yields, the leaps that does, it's very much the same amount of leap forward velocity that takes place when you understand this as well. It's very similar. Some things in smart money trading are things that really light people up. Like you get a real sense of like, oh man, aha, that makes sense. Oh, like, whoa, okay. This is one of those things. Same with the bonds and yields and how impactful that is. All that stuff, all those things are very aha moment inducing factors. Okay. At least they were for me, right? I lit up when I saw things like this take place. And then just right in front of my face, including Power 3. Power 3 was a insane aha experience as well when I first discovered it. And all the different ways that it impacts the market, Again, this whole process that we do, and then of course the systematized validation and validation process that isn't too overly complicated. These things are vitally important. They help you with what? Price navigation, right? And when you're able to navigate price, all that's left is you being able to learn how to manage the lower time frames and whatever time frame you look to enter on, and then mastering your model, right? Not taking other things, developing discipline, and then there's a targeting process as well. I've made it even, very simple, right? Same with what ICT has said. Just aim for the minimums. 20 to 30 points in the NASDAQ, 5 to 10 points in the S&P replaces your job. 3 times a week, it replaces your job. I mean, there's no getting around that. It's a fact, right? Just do the math. Especially if you work a minimum wage job, maybe you work in a warehouse, maybe you're in a different country. It's spectacular how much a little bit done consistently in the market can make some dramatic changes in your life. It really is. Either as a supplemental income to cut hours at work so you don't have to sell your soul to your job, or you just overall quitting and just going on about your business as a profitable trader. All right. So in conjunction with what we talked about in terms of what the bonds and yields are supporting, which is lower DXY, higher foreign currencies, and from what we see here, we're going to continue to assume that, maybe we're going to see higher indices if this run can continue as a result of the price delivery we see in the coming week. Right? So we're going to see if that continues to be the case. Does everything make sense here? And tell me in the chat too. When we go through all the bonds and yields, and then the currencies, and then the DXY, and then we finally get to the indices, tell me in the chat, does that stand out in terms of like how much easier it is to come to a determination as far as what we think the indices are going to do? Because all these other things took a little bit of time, plus I had explanations to make, right, about certain things and things to point out. But once we now got to the indices, now we know exactly what we're looking for. And we just did an analysis on this in literally less than 2 minutes based on all the supporting information. But yeah, I want to make sure, does all the process that I continue to show, that I'm going to continue to show, bring more of an ease to your analysis in regards to the indices? Considering that, that's, or assuming that that's what you guys trade. 95 say, yes, sir, it does. Awesome. What about you, Tony? Do you get that same effect? Right? Does all the things that we have done, yes, definitely helps, and you see what's going on. Exactly. And then again, not only do you see what's going on in terms of where price is headed, it also, if you incorporate the validation and invalidation principles and system that we just talked about, if you incorporate that as well, not only do you know what's going on, but you also know when things change. So by default, after all this stuff is done and maybe things get invalidated, when it's time to change your narrative. So you're not flip-flopping and getting confused and, oh my God, I don't know what's happening. You have the information just based off the things that we talk about with this process on a weekly basis. You have enough information to validate, invalidate, identify where the draw on liquidity is, what levels could be potentially considered as a draw on liquidity, what highs and lows are important, what PD arrays are important. We've already dissected that. It's the ones that are closest to where price is at currently, right? Previous day's high, previous day's low, previous week's high, previous week's low, regular trading hours gaps, new week opening gaps, new day opening gaps, previous month's highs and lows. Okay. And then the whole list of PD arrays, out of the whole list of PD arrays, given where we're at in price, what is in close proximity? That answers what's important right now, what you need to be focused and paying attention to. All the analysis that we've done, from the bonds and yields all the way up to the indices, all of that helps identify what the narrative is in the market as a whole. So you have a whole of market approach to then solidify your decisions, in which a lot of people are making financial choices on. Not everybody, and this isn't financial advice, obviously. But it's just such a thorough, repetitive, consistent, always very similar process to get us to what we think is going to take place. And then now today, I really laid out the validation and validation process as well. So then you can know when to change your perspective if that is what you have to do based on what the chart is telling you. And all this systematized process, like this whole process that's so systematized, removes your thinking of, oh, I feel like it's going to do this, or I feel like it's going to do this or that. No, it doesn't matter what you feel. Okay, what is the market saying to you overall? Because that's what's going to be followed, not how we feel, not what we want to see happen. Of course, I'd like to see it do this, but if price just decides to say, no, we're not going to do that, I know how to gauge whether it's going to tell us that or not in a simplistic manner using our 3 PDA rule. Right? So yeah, those things that I just mentioned is pretty much everything that we've talked about today. We came to a determination for narrative and bias. And the whole process is there. And again, everything has been laid out in terms of system. And of course, we're going to do this on a weekly basis just to really continuously drive this home until every single person that follows me and is subscribed with me that is a supporter of what I do, that does love trading the way I do. Okay, we're going to do this until every single person that supports this channel and, every person that, shows up here, gives me their time and wants to be successful. We're going to do this until every single person has this process understood. I'm going to do my best to do that. Make content surrounding that. Literally focus on that specifically. Not for anything else. I just want people to taste this. It's something that is incredible. It's a system that obviously all the components I learned from ICT, but it's a system that I implement in my way. Not everybody does analysis this way. You go to any other ICT trader on the internet, on YouTube, I've done it myself, and look at their process and how they do things. They don't do it like this. And if they do, they're just not saying it. Like all their evidence. There's nothing hidden from what we do here. It's all on a platter. Why not, what it should do, what it shouldn't do, when to validate, invalidate, how to target, all these different things, So yeah, I hope all this stuff has been valuable. Again, if you guys have any friends that like this type of content or you think would be an asset to the community, or, you think that, we could be an asset to them, and maybe, they can bring some value to the chat and community that we have going here, definitely send them a link to this, invite them next time. Definitely, if you haven't already, like the video, definitely subscribe to the channel, turn post notifications on so you never miss a video. And as always, you guys, God bless you. I appreciate all your guys' support, engaging in the chat, sending me your questions, being vulnerable, telling me your ups and downs. It's very much an asset to those that get to watch the replay or those that are present, because everybody goes through their troubles and trials and tribulations. And knowing that they're not alone, I know that was something that I needed myself, so I'm grateful to those of you that have that type of transparency and are not scared to admit that, because, it's an asset to you, but it's also an asset to others, and allows them to not beat themselves up so much, because this is a hard industry. It's very difficult, and but it doesn't have to be rocket science. All the stuff we did today, I hope that, I was able to justifiably explain it in a very applicable way, so then those of you that watch this video can go in and start applying this throughout the rest of the week and hopefully the rest of the year. But yeah, if you guys got any questions, hit me up on social media, on Instagram. I always do my best to reply, get back to y'all as soon as I can. But yeah, thank you guys so much for the support, the love and support. I will see y'all on Tuesday. But until then, I pray that you guys have a wonderful rest of your weekend, and I will see y'all then. Take care, you guys.